Hey, this is John Howell here, founder of TradingInvesting4U.com and also featured in the best-selling book, Secrets of Stock Market Trades Exposed. Now, I want to welcome you to another edition on keeping you on top of the market. So without further ado, let's get into the education. Hey, traders. Okay, so in this video, I want to, instead of going over a bit of a market update, I want to give you a hint and also a bit of a tool, and this is just another technique to use with inside your trading. Now, the technique and strategy, or I guess the tool that you can use with inside your trading is understanding gaps. Now, there are quite a few different gaps. Some are a common gap, some are a breakaway gap, some of an exhaustion gap. So there's three main gaps that generally happen within the market. Okay, so there's a breakaway gap, and then after the breakaway gap generally comes the continuation gap, and after the continuation gap generally comes the exhaustion gap. Okay, so what I mean by that is this: if you see a market going up like this, let's just delete that off the screen. Generally, a breakaway gap will start more of a trend. Okay, so the trend's been going down, then something starts to pick up, and then boom, it gaps up, and it gaps up here. This here would be like a breakaway gap, sort of the first gap of the move, and then it runs up through here, and then it gaps up through here. This here is what you call a continuation gap, okay, because it's continuing the trend. And generally speaking, what will happen is market moves up, it gaps again. This will be like an exhaustion gap, and that's generally where the market's sort of exhausting itself. Now, that's the three common gaps here. We have one gap. This is the breakaway number one gap. We have the continuation gap and the exhaustion gap. Okay, but that can happen on a lot of times. But what I'm finding more and more is the market only has one gap, and the market generally comes and fills those gaps. Okay, so what I've seen in a lot of times is that breakaway gap, continuation gap, and exhaustion gap, that can work. But if you're into that theory of those breakaway gaps, continuation gaps, and also exhaustion gaps, actually really you're into that, then keep doing that if it's working for you. But I want to suggest that there's no real breakaway, exhaustion, whatever. What I want to suggest to you is that let me fix up my screen here. What I want to suggest to you is that gaps right now, what happens is the gaps in the market, what I want you to do is I want you to be careful, because if a market gaps, generally speaking, it's likely to get filled. Now, each stock has a different characteristic around the gapping of what it normally does when it does gap. But I want you to go analyze it. If you're trading a stock that does gap quite often, or if it does gap, then you need to go back and research its history, because each stock really has its own characteristics of what it does when it gaps. Now, right now, we're looking at Google, okay? We're looking at Google here in an example. And what I'm going to do is I'm going to show you exactly what Google does when it gaps and what generally happens when it gaps, okay? So you can see here with Google, you can see how we had a big gap through here, okay? The market gapped up through here. And what happened after a gap, it ran up a little bit for probably maybe a week or two. And then it came down and closed that gap through there, right? Closed the gap. And then the market ran up through here, came back down, came straight back down, ran up, and what happened? It then broke straight back down, and we had this gap through here, right? So gap through here. What ended up happening? It ran down, and it ran down for a little bit before it came right back up and almost closed that gap through there, right? Almost closed the gap. Let's take that off the screen now. Then this next gap over here, you can see this is the next gap, the market here, and the market broke back up. And this gap here, it broke back up. Guess what happened? The market continued up for a while, and then it came down and sort of closed the gap, right? A little gap through here, but not a big gap. We had a sort of decent gap through here. What happened? Market ran up for a little while, and then it came down and closed the gap. Okay, what happened here? Market gapped down, and now it's slowly crawling up to the high side to close this gap. So this is the characteristics of Google, right? Most of the time, if it gaps up huge amounts, like you can see here, this whole thing is a gap, then it'll generally slowly crawl up for a while before heading back down towards the gap. So whether if you're investing in this, then you'll know generally what that means, what you want to do that. But especially if you're trading this, you will know that, okay, the market's gapped. I can either go long here, or I can wait for it to start to go back down and know that the probability of, if the market gaps and start to head up for a while, and then we start to get some downward movement, the chance of it closing the gap is very, very high, right? Because it's very unusual for a gap not to be filled, especially on Google right now. You can see over this, probably this is well over probably getting close to a year and a half of the data here. And every time it makes a big gap to the high side, it'll run up for a while, and then what will happen? It'll generally come back down and fill that gap. So that means you could potentially go short up here, if that's your sort of risk tolerance. Okay, you could be looking to go short up here somewhere, and you could be looking to go short up here somewhere. So every time the market gaps up or gaps down, generally speaking, that it'll go back and fill that gap. Now, this doesn't happen all the time. Okay, we know that. We always got to make sure that we got our we're going to make sure that we've got our sort of, thinking caps on. Make sure our risk sort of bucket is there. Make sure that when we're trading, we're not trading too much of our bank account at one time. Okay, because not every trade is going to be profitable trade, right? We've got to be realistic with ourselves. But looking at this here, this is just a tool. I want to let you know that there's 3 gaps out there: breakaway gap, continuation gap, and exhaustion gap. They do work, but I'm finding more and more and more there's just one gap. And what happens is there's just a gap, and especially if it's a big gap, then that gap is likely to be filled. So no matter what happening, no matter what you're doing, no matter what stock you're trading, okay, what I want you to do is, if the market does gap, then realize that gap is likely to be filled in the near couple of months or more. Okay, depending on what stock you're looking at. Here you can see within so probably 3 to 4, maybe a bit longer months, the gap is generally filled with every single gap here. Okay, you can see here, this one here took around about 3 to 4 months. This one here didn't really get filled. Actually, this is the one gap it didn't get filled. This gap got filled, this gap got filled, and this gap got filled. So if you're looking at this whole year, you'd say, okay then, if you did trade this strategy, market ran up, and you let it run for a little while, and you went short up here somewhere, and then you took profits as it went closer to the gap, profitable one trade. You did the same thing here, oh, you got stopped out here. You did the same thing here, oh, profitable trade. The same thing here, profitable trade. The same thing here, profitable trade. Okay, so you can see here that overall you had 1 stop out, but 3 wins here. So that's just the characteristics of Google. Okay, now I'm not saying go out here and just start trading this. Okay, no. If you're seeing a gap and you're seeing the market do its thing, it's all about doing your analysis on the stock and say, okay, when this gap's over the last year, 2 years or more, what's the probability of it coming filling the gap? And then you might want to use it as part of your trading strategy. But that's not what I'm talking about here. Okay, what I'm talking about here is just letting you know that a bit of a tool and a technique that when a stock does gap, it generally likes to fill that gap up. Okay, again, depending on what stock you're looking at. If you find a stock that gaps and it doesn't fill those gaps at all, well, obviously it's not going to work for that stock. But generally speaking, most stocks that do gap will likely come and fill that with several months moving forward after that. Okay, now once again, you've got the 3 different gaps. You've now got this gap here. When stocks do gap, they generally do come and fill that gap. And now we can see within Google. Okay, we can see within Google right now that this is just analysis, and by understanding what Google's doing, we now know, okay then, out of the 1, 2, 3, 4, 5 times that the Google has gapped, it's now moved forward and it's now closed that gap. So I hope this has helped you out. I hope you understand that gaps can be a good thing. There could be also a good trading opportunity as well too, if you want to put a bit of money into looking for a profitable technique, a profitable pattern, because that's what trading and technically is all about, right? It's all about finding a pattern that works more than not and about trade that pattern. That's exactly how trading technique works. Okay, I'm out of here. Make sure you say these yourselves every morning, every afternoon, every evening, and that is success can be yours if you go claim it. So step up, take massive action, and face your fears today.
Since being mentored by Johnny Howe, I have found that my trading skills have grown tremendously.
John Howe is truly one of the best traders of the 21st century.
John, thank you so much for all your time in helping me to become the professional trader that I have been striving to be.
And that saw me take home $1,500 Australian after expenses in only 6 trading days.
I now know I could trade on my own and be successful at it, simply because of the way John has taught me.
Over the last 5 to 6 months, we have a 70% success rate. This is amazing considering how volatile the markets are.
But at the end of January, I was in a position where I could finally test out a couple of live trades. Nothing big, not a lot of money, but on the 2 trades I put in 1 week, I was $1,200 clear. Amazing.
And my last few trades have been fantastic.
I just wanted to say thanks, John. You've got a very, very happy camper here.
I'm absolutely positive that I'm learning the necessary skills to trade the market in any condition, and I'm also earning some money along the way. And I've found John's knowledge of the markets and his enthusiasm to be fantastic.
He's always available and approachable to answer any questions we have to help us get ahead.
With your phenomenal wisdom and insight into the market, you have given me the confidence to step up and take real responsibility in my trading, and the results are starting to flood in. It really means the world to me and my family, and I cannot thank you enough.
So I really have benefited so much from being mentored by Johnny and applying the techniques that he uses, and his mentoring is second to none. Thanks, Johnny, you've really helped me.
John is the real deal.